Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is developer and real estate investment expert Josh Pardue. Josh is the founder and principal at GNP Development, a privately owned boutique real estate investment and development firm based in Tampa, Florida, but whose projects can be seen across the country. GNP has a track record of more than $1 billion in investment, development, advisory, and currently has over 500,000 square feet under development. So, guys, without further ado, I'd like to welcome Josh Pardue to the show. Josh, how you doing, my friend?
Hey, Kevin, doing very well. Thank you for having me today.
Excited to have you here. Excited to pull back the curtain and learn a little bit more about GNP. And but more specifically, maybe we'll start with you and yourself. And Josh, what I'd like to do here is kind of pass it back to you. I gave you that brief introduction. I know there's so much more to the backstory and who you are, what you've done, where you've been. And so maybe take a few minutes for those that aren't familiar with you, don't know of your name and what you do, and just tell us more about yourself. I guess maybe prior to real estate, and then also how you found your way into this world.
Yeah, no, I appreciate it, Kevin. I grew up in Central Florida, Daytona Beach, East Coast water.
Mhm.
Always an entrepreneur growing up. When I came to Tampa, undergrad USF, studied finance, started a couple of small businesses. At that point, they did pretty well. Took that money, started buying houses and renovating them. And just while in undergrad, kind of moved from house to house, realizing you got better primary financing if you moved into it, and that you only had to live in it for 4 or 5 months and move to the next. And kind of while I was taking the money, I was just focused on a 10% cash on cash was really my model at that point in the journey. I thought when I was done with undergrad, I'd moved to New York to do a more traditional finance route. But at that point, I completely enamored with real estate. I remember growing up in Daytona Beach, watching cranes pour concrete and thinking about how the money came together for mid and high rises. And what we now know as a capital stack, and how you get your debt and equity and bring the GC in, and what we call development. And I was fascinated in it. And at that point, was doing commercial at Colliers for several chapters of the book. Moved up to New York City, started a little business that did capital markets, debt and equity for net lease, long-term single tenant deals. And then that was going well. And when the world fell apart, that business, the bonds of commercial real estate, if you think about a Walmart, did well, and then started going after some distressed properties with a GNP Development out of Tampa, Florida at that same time, and kind of ran both of those businesses for a while. And I remember in the downturn, talking to the folks at the Colliers Capital Markets that were very much like, you're going to call banks and do BOVs and help the banks work out. And I was I don't know if it's naivety or spot on, but I said, well, if we call the bank, shouldn't we be asking to buy some of the distressed assets? And they looked at me funny, right? Because it's a fee-based model.
Yeah.
And so I said, well, I'm still going to do that. And it was fortunate to form, at the time, maybe a dozen LLCs for single purpose investments, ranging from an acre to, we got some there 200 acres, some existing cold storage, industrial, a lot of different assets in the downturn. That we bought them right, and some of them we'd figure out what we're going to do along the way. And then while I was doing that, I was running the business out of New York. It was more fee and ordinary income based, and kind of just running those two programs, trying to find some synergy over them. And here we are, 2024, and gone through a strong growth market, but of course COVID and different things. You laugh a little bit about growth and recovery. And then if you remember the Trump presidency, some growth, and then low interest rate growth, and then COVID, and it's been a fun run. But we were talking about before, right?
That's right.
Systematic risk, unsystematic risk.
Yeah, it's been very different than well, yeah, it's funny that you actually mentioned like COVID growth, right? Like, Florida, there's a few areas that, of the country that really benefited during COVID times, and Florida was one of them. I mean, it was an absolute boom town as a result of that. Lower interest rates also helped as well, but everyone was trying to come to the sun and the fun, I guess, right? It's you gave your background. I appreciate you sharing your background there. It's interesting, kind of your start, right? Just buying during undergrad, buying single family properties. They have terminology for that today, what that's called. It's actually got it's got a label, house hacking, right? But back then, you were just buying good opportunities, living in them for a period of time, fixing them up, and then parlaying those profits into the next opportunity. But today we've got an actual good term for it, house hacking. So
That's very 2024 to have a term.
that's right. That's right. That's right. Well, let's talk about, we talked a little bit before we started recording here about just about, you're in the Tampa market. I'm in the Tampa market. I've lived here since 2002. It's a very different place today than what it was, 20 years ago. And for the better. I mean, lots of growth has happened. Just lots of positive progress across the board. But, 2008, Florida, Tampa, Miami, Orlando, Jacksonville, basically all the major markets in Florida, amongst a number of other markets throughout the country, really were ground zero during the great financial crisis. And it was, I mean, it was a very challenging time. This is when you were, calling banks, doing BOVs and saw some opportunity there. So let's start there, because it sounds like that's really where the foundation kind of got laid to what GNP is today. In fact, you guys are still working on projects from opportunities that you land banked for the last decade plus, right? And so I guess I had a hard time in '08 because I lost a lot of what I had built over the prior 6 or 7 years. And so, as we were talking about before we started recording here, is that it's very hard to to take 10 steps back and then see an opportunity during such challenging times. Again, buy low, sell high, or buy when there's blood in the streets. Again, as I mentioned, it's very difficult to buy when you're on blood in the street. It's just difficult to see the forest through the trees. However, you saw the opportunity. But even then, it was such a crisis here. The interesting thing, and I'd love to get your feedback. It was so down for so many years. It's very difficult to see when there might be, when we might actually get through that trough and actually start coming back up. And I don't really, I'm sure there's different data points out there, but I don't think we really started coming back out of this, at least if you want to speak to the local marketplace, probably until 13, 14-ish. Would you agree with that?
Yeah, that's what I was thinking when you were saying it's 13, 14-ish. But like, the 8-ish, 9-ish was very scary. And then it was just everybody was frozen for some years. Yeah. So it wasn't continuing to decrease, but it wasn't on the growth pattern back.
So when did you start buying? When were you actually starting to buy some of those distressed opportunities? What time frame was that?
I looked at it pretty early. I was going off of really just Finance 101, which was, if you look at the technical analysis charts for stocks or real estate over the history of the United States, and you do the trend line, and you look at that. So I saw that. And then I remember a wise gentleman from New York that I knew that was a mentor made a comment that my mother made, which was kind of jokingly like, when do you buy your toilet paper if you're savvy? Well, when it goes on sale. And when would you buy your property? When it goes on sale. And so like, I'm looking at this thing and no one's coming into the office in 2008, 9, 10, 11, like no one's in the field, no one's on it. And I'm just sitting there thinking, I believe in Florida. It's where my family and friends are going to be. Like I moved to New York for a decade, but I knew Florida my place. And if I believe in America, which I do, and freedom, and I believe in capital markets, and I believe in that technical analysis chart, then I just have to go buy some stuff right now.
Buy the toilet paper.
Buy the toilet paper on sale. And, it's fortunate, to talk to them. And you got to have people that believe in you, of course, to raise capital and put those kind of deals together. And look, as you're doing that, you're buying right. So you're mitigating some risk, but you're also, look, each single purpose entity and each piece you buy with 2 weeks, 3 weeks of notice in a lot of those sales, you don't always know what the business plan is. I'm fortunate to report, everyone's at least gotten a basic IRR and some promote, and some have gotten a lot more, but a lot of different asset classes come out of that when you're just buying something to buy it right versus other development. I'm going in because I know I want to do multi.
Yeah.
Or I mentioned before, a third of my business is single tenant build to suit, a third of it's the distressed asset conversion, and a third of it's kind of my passion, urban neighborhoods and urban infill and having an impact on the community. Well, when you do that distressed third, you got to kind of figure out the business model later. You just know you're baking in some equity, which eliminates some of the risk, the execution risk. But you still, there's still always execution risk and some learning curve with different asset classes.
How challenging was it to get capital partners on board during that time? So I had a couple of years of paralysis. It was more dealing with damage control of trying to mitigate, what I had and what was unraveling, right? And so there wasn't enough time in the day to really focus on, what's phase two look like. I got to deal with phase one today and get that under control, or just, get it stabilized, whatever the hell that meant, right? It never was, right? It just was kind of a downward spiral. But in 2011, I really, I started focusing on what's next. But the big challenge, at that point that I found, kind of seeing the opportunities, this believing in the market, believing in the future of Florida and Tampa Bay. I had a challenge, a big challenge. I felt as though bringing the equity and getting folks on that storyline and getting them to believe, right? Because all they, what most folks are looking at are the headlines, and it's still doom and gloom in 2011, 2012. And so, talk to me about your pitch. What did that elevator pitch look like? Again, toilet paper's on sale, great. But what does how do you get them to believe in the future? Because that as the years went on, the future became more and more distant, it seemed, because things weren't getting that much better that quick.
Yeah, it did. It took a while to get momentum. And once it got momentum, it wasn't like you could feel it. Coming out of the few month COVID pullback was so sudden. And once it turned back to the positive after some months, you could feel that turn. Well, with the 2008 correction, you couldn't feel it as much. Next thing you know, you just looked up and folks were starting to do business a couple of years later more, and it gained. But look, each LLC and each project is its own merits, and I think that's the way that you have to look at it and explain it when you're putting those kind of deals together.
Yeah. So talk to me about GNP today. What are you guys up to? Where do you spend most of your time?
Yeah. So on the national build to suit front, we finished a surgery center in Ohio, in Orlando, human surgery centers. Those are 15, 20,000 square foot, 2 or 3 OR, turnkey build out. Previously, we built hospital surgery centers in Denver, Arizona, other markets in Ohio. Right now, we're active on other specialty medical in Portland, Austin, North Carolina, finished a couple in Minneapolis and Alabama, and then, of course, have some single tenant stuff in Florida. We have one in Coconut Grove, Miami, which is a fun one because it's very competitive and expensive and ridiculous numbers. And then of course, some work in Tampa. So that single tenant build to suit is part of the business. On the land side, I mentioned, some of that is in Jacksonville, some of the land that we're converting. We've got land in Haines City that's working for townhomes off of I-4 and 27. That's 11 acres there. We have some land down in Northport, which D.R. Horton's buying homes at 500 lots based on an old golf course conversion. And slowly going through and finishing up some of those conversions of the assets. And then the next frontier has been made a lot of investments in downtown Jacksonville, because I believe, South Florida went up, Tampa followed, hasn't caught up yet, still has some growth room, but Jacksonville is the next market to catch up, in my opinion, with some of that growth. You look at 95, you look at it's 20 minutes from the beach. It's closer to get from downtown Jacksonville to the beach there than it is from downtown Tampa to the beach here from a time perspective. And I've had the office I've been in and out of Tampa for my most of my career now. So I love Tampa, but I just know that Jacksonville might be where Tampa was 10 years ago. You could go buy one of those cigar warehouses as a data point. They're now 5 million in downtown Tampa, that they were 1 million 10 years ago. You got that opportunity in North Florida. Obviously, Ocala. It's even funny, St. Augustine, St. John's, all that area is really picked up. It might be the next frontier as you think about Florida growth. But then we were discussing earlier, I'm in channel side. We're working on some projects and helping support on a big push to convert Ybor City around. And there's a lot going on there. And of course, downtown Tampa, 10 years ago, you leave downtown at 6 o'clock at night, and the joke of the dust balls, because everyone's
dead. Yeah,
back to downtown Tampa. Now, of course, there were Sky Point elements with the early high rises that a lot of people remember. That's all there was. And now all of a sudden, when I'm in downtown Tampa, I can barely keep track of the condos and the hotels and the high rise development. And what's funny about it is a lot of those are pretty expensive. Of course, the Addition did really well in Water Street, but that sold 40, $3 million condos. Now you've got like the Pendry and One Tampa and these really impressive projects with high price points. And of course, it's just a different world. Groups like Related coming in from South Florida. It's really embarrassing a lot of us developers in Tampa area because Miami guys coming in building the marquee projects in town. But it's just
Tampa is a blue collar. I mean, like it really was. It was a blue collar. It was a blue collar city with intermittent wealth. Kind of speckled throughout, right? But now it's completely different now. I mean, there's a lot of wealth here, lots of money here, and there's obviously demand for that product. But I mean, even leading into '08, I mean, there was a number of projects in the Channelside district and downtown that were that had been built or were in the middle of being built that, in our eyes, being local were very high end projects. And that meant like, maybe there were units that might have reached, a million plus, on upper floors or penthouses, things like that.
mm-hmm.
Maybe a little over. I don't think there's probably anything over 2 million if I recall. And now that's kind of the norm today. So I was always disappointed as well that downtown St. Pete seemed to get its legs and got organized a lot faster than that of downtown Tampa. That always disappointed me because I was always such a huge fan of downtown Tampa. I saw such an opportunity there, but it found its footing. It got its legs and it's caught its stride now. But it definitely, I was always a little disappointed that downtown St. Pete beat us to it.
Downtown St. Pete did a great job. Now, so as an urbanite, that if I didn't have my business in Channel District and family friends like all in Tampa, I love St. Pete, and you can't knock it. The culture.
No, it's great.
Central, though, if you look, they have a grid system and they have one core urban market around Central, right? So everything's walkable, everything's condensed. While when you look at Tampa historically, 20 years ago, South Tampa, Ybor, downtown, there were just different submarkets at Tampa, and none of them were walkable. And I think the turning point, a tipping point, if you will, for the Tampa market that we're coming up on is, of course, the Riverwalk creating great connectivity. Water Street filled in the gap between downtown and Channel District. And now Gasworks is going to fill in the gap between Channel District and Ybor, historical Ybor, with the Gasworks project. And then Encore is connecting North Franklin and Tampa Heights with Ybor and Channel District. So it's now conceivable that in the next 10-year run of development, you'll have a true downtown with walkability from, call it 21st, 22nd Ybor City, all the way over to Curtis Hickson Park. And that's what Tampa's historically lacked, is that continuity and that ability to walk from submarket to submarket. It mixes in all the different cultures. The advent of the electric scooter, which, it's kind of silly, but I've got, I bought everyone in the office. We've all got these electric scooters because we're so close to Ybor downtown. I think it's important to build those concentric circles. And so as this fills in, all of a sudden, the next 10, 20 years, Tampa is going to feel more like a city. And we'll start to rival some of St. Pete's walkability and benefits in that regard.
Well, you mentioned Jacksonville, and you feel like that's the next Florida city, the downtown market that Miami is already there, Tampa years behind, but well on its way, and Jacksonville being maybe the next one that really sees its hits its stride and sees a lot of redevelopment taking place in the downtown area. And I'm I haven't been to downtown Jacksonville for many years, and so I'm not familiar with what that current landscape looks like. But I guess the question would be, what do you look for? You're an opportunistic type guy. You're seeing, potential growth market here, not too far away from where we're currently located. You believe in the state of Florida. Where do you go spend your time and resources and capital? Like, how do you identify the particular, sub market within that market that you want to put your time, effort, and energy into?
Look, and to be clear, right? It's all, you start with your strategy and then you choose your market. If you're looking for low risk, large investments, South Florida still, of course, has a lot of room to grow and fill in relative to the corridor between New York and Philly, for example, which conceivably Fort Lauderdale to Miami along 95 and US 1 could fill in to much more dense in our lifetimes. And it looks like it really is. You look at Miami and that infill, and it is, but that's lower. Some of those deals are lower yield because the basis is baked so high. And so when I say, Jax has a lot of opportunity, I'm just purely on technical analysis. If you're looking at how to maximize IRR, well, Jax may have a lot lower basis, that when it grows could create abnormal returns. But of course, the risk profile in Jax is higher because it is all spread out and doesn't have the density and demand that, you know, Palm Beach to, you know, South Miami does, just being an amazing place to live. And Tampa and Central Florida, Orlando is a little bit, you know, stuck in between in a good way. They're all very investable markets. It just depends on your strategy. For me, picking up half a dozen parcels in downtown Jacksonville seemed like a no-brainer, risk adjusted. You take that same investment and place it downtown Miami, and you're getting up to one LLC instead of six, right?
Right. So like in a downtown Jacksonville, you'd be just looking for, you know, infill vacant parcels in the downtown marketplace, just something to kind of land bank for a period of time.
That, and sometimes you look at covered land plays, buildings with some income. We've got a mixed use project in Jax. It's going to have some commercial and some residential. Bought a vacant school that got abandoned in the downturn and converted that to a nonprofit school. I'm working on converting some churches into an event center right now, and different things there. You know, in South Florida, we've got a cold storage with Cheney Brothers and another food tech company in it, in Fort Lauderdale, and it's been fun to watch that industrial market pick up. In Miami and Coconut Grove, on US 1 between Coconut Grove and Coral Gables, bought an acre for a single tenant build to suit project, 20,000 square foot commercial deal, and it was just wild to watch the land. How many high-rise developers approached me as I'm going in for permit on this smaller project, because it's Miami, an acre there in that area. You know, they're building mid and high rises as fast as you can get it. And so it's fun to see the perspective of the different markets. And then in Tampa, you know, I talked a lot about the Ybor and that transition, exciting what's going on there. I think that in the Tampa market, you know, we talked a little bit before the show about what it was 20 years ago, where it is now, and seeing the future. You know, I still see Tampa's changed a lot in the last few years. The people you meet, the driver's license from out of state, you know, the culture, the vibe, the restaurants, but still potentially could have a ton of room to grow and change.
Well, what do you feel the reasoning was that it took Ybor so long to really get recognized? I mean, it's always been there. It's been there for quite some time. It's always been entertainment district. There's always, you know, there were some conversion projects that took place leading up to 08. You know, old lofts and things of that nature that were converted, but it just never seemed to really get any momentum before the crash happened. Then very slow thereafter. Was it just its disconnection to the Channel Side District in downtown? Was that the primary factor, you think?
I think there's a few things going on. I mean, first you got to step back and recognize, look, the state of Florida has St. Augustine, okay, which is just an amazing asset, historically speaking. And the age of that asset relative to even historic markets in the Northeast, it's an older historical market. And then when you look at other historical markets in the state of Florida, you know, Ybor is right up there next, from a architecture, from a culture, from a history, from the time developed. It's on the short list of state recognized historical districts. So I've always looked at it and been confused that the city of Tampa didn't put more focus on it. The city recognized it as historic and treated that. But I also think what had happened for the majority of Tampa's recent history is the city commissioners, and this is speculation with some insight. Look, the entertainment industry had to happen somewhere. A lot of the city leadership lived in South Tampa. You have downtown.
They didn't want it there.
I'm like, yeah, this is how small towns, small cities run business, right?
Yeah.
It was nice to have a lot of the entertainment district in Ybor because it was self-contained, you know, Friday, Saturday night, and it kept some of that out of there. I think in the current chapter, it's taken a lot of leadership of, you know, a few visionaries and some hard work in the Tampa market changing to now say, all right, hey, look, Ybor's better than just entertainment district. It needs to be brought back to its glory, which was originally, it was a village where you had housing, you had work, and you had retail and community, all self-contained in Ybor. And when I use the word village, and I see the next chapter, we're now bringing 5,000 units. Okay, that's 5,000 units with, call it 7,500 people living in there, all paying for the rents for a Class A mid-rise these days, is going to clean up a lot of what's going on. A lot of the riffraff, naturally, with free market supply and demand, as these consumers go down 7th and need to shop. the little tattoo shop or the little bodega, it's a little seedy, the smoke shop, those things might not be competitive anymore when you have all these affluent people, walking around. And I think that'll help clean it up naturally. And I don't think it'll ever not be an entertainment district by any means. And it shouldn't. It should stay. It should stay at that. But it just needs to find balance, because for the last 10, 20 years, it's been all entertainment and lacking history. I believe right now there's 3,500 residents in Ybor is a common stat, while the new 5,000 units that are coming are going to bring 7,500. So that's what a 3x on population.
What's the timeline look like on that Gasworks project?
So a lot of people still don't quite recognize it, but West Ybor has already delivered, call it 500 units. Gasworks, there's a building called La Union, a project over 300 units on Nuccio Parkway. It used to be the projects, and now that is a Class A apartment building. So there's over 500 units already delivered of that 5,000, and so it's happening as we speak.
Who are some of the major folks that are spearheading that project and the revitalization of that area? Is Vinnick involved in that at all?
No, Vinnick, of course, put his chips on the table and did an amazing job in Water Street in partnership with Gates. And I believe they came in all cash, eventually pulled some debt out and just built the city within a city. And, Tampa needed that at that chapter, and they did a great job delivering that product type. This project is spearheaded by Daryl Shaw, who is, a Tampanian that was passionate about Ybor, sold, exited another business, and then made the decision to place a lot of capital in the market, and more importantly, make that the next chapter of his career, becoming a real estate developer and really driving. There's always been a handful of really prominent property owners in Ybor, and that goes back several decades. And it was a lot of status quo. While with the new investment from Daryl, it's been all right. Let's start to think about the future and figure out what does that look like, going back to the balance and the village and the next chapters.
Yeah. So Josh, what are you most excited about today? Like, in this next calendar year coming up here, like what has you most excited, whether it's be specific projects you're working on or maybe a slight shift in the market, just what keeps you up at night in a good way?
Yeah, I was gonna say we can have some fun talking about the last 2 years with high interest rates, and how that now in the last 90 days, the Fed, was maybe a little slow to raise rates up. And now they've been a little slow to bring rates down, but they have announced that they're bringing rates down. And that's going to help a lot of pro formas. It's going to help a lot of progress. It's going to help a lot of investor sentiment. And I think that you're already feeling the Fed's 50 basis point adjustment. And more importantly, there's signals that there's another 50 to 100 basis points in the next 12 months. And that's starting to loosen things up and bring back, positive vibes to a lot of development projects that rents went up, but cost and rates went up higher as a percentage. And so it caused a lot of projects to stall.
Yeah. I mean, just given the vacuum that's been in the market here for the past year and a half, obviously a lot of projects got stalled, just some distress as well.
Yeah.
Did you guys find opportunity during that time?
We've been pretty fortunate to be busy with the old distress cycle, and then some of these urban Florida markets that I'm mentioning in our build to suit business, that I hadn't personally reached out. I do know that there's been some opportunities, and there's been some funds that were set up to call on borrowers and call on banks and say, hey, look, like you're in trouble because your interest rate, your debt service coverage ratio isn't covered, but you've got a pretty good asset and you've got some cash flow and you're in technical default. So what if we come in, insert some capital, fix the situation, and help you live to play another day? There's a few funds that I'm involved with, friends with some of those folks, and it was certainly compelling to look at that, but I didn't get involved in that. But of course, a lot of that has been going on. There's also been some of the banks saying, hey, it's a technical default. The borrower is still paying the mortgage just because rates went higher. I think there's been a lot. We know there's been a lot of that workout and a lot of distress still that the banks have been fortunate to give them time. Agreed. But I think just, these current indications should help.
So Josh, outside of GNP, where do you spend your time? What keeps you busy hobby wise?
It's funny, Kevin. I grew up surfing, sports, I've traveled 40 something countries is probably my, the thing I really advocate for is getting out to see the world and learning that way. Since moving to New York in 2011 and running business there and a business in Florida, I gotten away from that. In 2024, I'm proud to say I've left the country a few times. I've actually put that on my annual goal sheet is leave the country once a quarter, get back to doing some of that. But we've got a few big transitions and different projects. And, I just, we're not supposed to say, Kevin, that we love what we do and we're workaholics kind of thing. But, I feel blessed every day to work on investment projects and live in America, be in an office, talking to people working on what we want to work. And biggest thing is just like selecting what do I want to work on, who are my partners, and how do I fix first world problems, not
I love it.
World problems. Yeah.
No, I love it, man. I love it.
How about yourself? What's
Yeah, no, I think I'm very similar in nature to you. I'm an outdoors guy. I mean, as far as like what I do outside of work, I mean, I love what I do. I mean, I love the art of the deal. Yeah, I love the folks in our organization, team members. I mean, we wouldn't be what we are without them here, and we all kind of work together and hustle together and have fun together. So, yeah, love every bit of that, and I don't really view it as work, right? I don't think there's ever a point in time where I would use the word retire in my dialogue. I just don't think it's necessary. So, yeah, outside of that, I got young kids. I got a 7 and 10 year old boy, beautiful wife, love traveling, love water sports, love the Gulf of Mexico. Not right now. It's a little damaged over here on the Gulf Coast, but generally speaking, love fishing, love boating, anything around water. I'm basically a water guy. I left Pennsylvania 20 years ago because I hated the winter time. I'm okay with snow. I love snowboarding. I fly out twice a year to go snowboarding, but other than that, put me in the sunshine, put me near water, whether it be a freshwater lake or the ocean, and I'm good to go. So I'm a pretty simple guy.
Outdoors. I'm with you on a couple of ski or snowboard trips. And I love
Yep.
your point there. It's really well said. Two words that I don't particularly resonate in the office is work and then boss. And building a good culture and surrounding yourself
Yeah.
with good people is really the most important thing. The real estate and the rest you can teach and figure out and enjoy the journey.
That's right. That's right. Well, my friend, I appreciate you coming on the show. It's been great getting to know you, getting to talk with you sharing your story with our listeners here. And I guess for those that are tuning in, listening to the show, that want to learn a little bit more about you and your projects, and just maybe keep a finger on pulse of what you guys have going on. Where's the best place to track you down?
Yeah, of course. If you wanted to search GNP Development, that's our development business. About me personally, it's just Joshua Pardue. If you search Joshua Pardue in development, a fair bit of information will come up. We started a year or two documenting case studies on YouTube about our projects, and that turned into teaching folks step by step how to do a build-to-suit development or how to raise capital. And so Joshua Pardue and YouTube on the internet is probably the best way to find more information these days.
Awesome. Well, good deal with Josh. Thanks for coming on, my friend. It's a pleasure meeting you and pleasure spending time with you. Hopefully we'll get you on for a future show as well. We'll get caught up on future projects and what's going on in your life. So, but with that, until next time, you take care, my friend.
Thanks a lot for having me, Kevin. Have a good afternoon.
All right, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.